What's up, peeps? Lucian here with the Bullish Bears team. I'm going to show you in this video how to trade cup and handle patterns. Very, very popular pattern. You'll see them on all different types of chart time frames. I'm going to show you ones that are obvious or clear-cut cup and handles, and then some not so obvious. And then just because something looks like a cup and handle doesn't mean you trade it. Right, so I'm going to show you entries and stop levels and multiple different ways on different looks of a cup and handle, how you would trade them, what to be aware of, support resistance levels, entries, think areas you'd look to get out, and then also stop loss level charts. All right, so let's get into the real world patterns. I'll show you here, again, you can look at pretty much any stock chart and you'll start to see a lot of these cup and handles everywhere. But this is the SPY, right? So this tracks the market overall. This kind of brings me back to the point, and you'll hear me stress it a lot. Candlesticks, foundation, price action. Anytime somebody buys or sells a stock, leaves a clue. That clue is either a bullish or bearish candlestick, which forms other 2 and 3 candlestick patterns, which goes out to the bigger patterns, and then the bigger patterns overall. It's important, again, to know horizontal and vertical support and resistance levels, so you can kind of take these patterns that you see, put them into those overall horizontal and vertical, right? Vertical would be those trend lines. And this is where, again, when you start to see these patterns and those trend lines and the support and resistance areas, that's where it shows you where the areas on where to potentially buy and sell. So candlesticks equal price action. Price action is real time. It is the best indicator to use when trading. There's no other magical indicator. You can use moving average lines, all that stuff. Most of those are lagging indicators. They're not real time. So price action, it's real time. It's the best indicator, and that's why it's incredibly important to learn price action. Because you'll hear me say over and over and again, price action is the foundation to everything when it comes to trading. So, and then again, understanding that foundation helps you to realize when things happen in the world, the talking heads, when something good happens, bad happens, doesn't matter where it's on the right or left. When you understand price action, you can see how it coincides most of the time or many of the times with what's happening good or bad on the charts. So right here is SPY. SPY tracks the overall market. That's why I kind of just reiterated again to understand this, learn price action, because if you can track the overall market, you can see what's happening in this world, and then learning the skill set, you put it to any stock or security, and then trading time frame, right? So your trading style and what you do comes secondary to knowing price action. You have to know the price action, the foundation first, and then you go over to your trading style, because you got to know support, resistance, patterns. So cup and handle patterns. You'll see just basically exactly what it kind of sounds like. A cup with a handle. And picture that handle to the right side. A cup, rounded bottom, right? So you look here. Here's a chart up again of SPY. And you just kind of look right here. There's a rounded bottom, right? So this is almost like a perfect looking cup and handle. So you have a rounded bottom. So price kind of falls. The rounded bottom is formed by consolidation, stocks trading sideways, forming that rounded bottom, and usually forms this rounded base, right? Support. Support, held this base, and then it starts to move up to the top of the cup, right? So you can see right here, goes up to the top of the cup, and you'll see I have the top of the cup, this line, and I extend it out to the future, because what happens in the past affects the future, right? So that's when you're looking at patterns and in a chart, and any type of chart, look left, find those peak and valley levels, those support and resistance levels, floors and ceilings. You'll hear me use analogies for buy low, sell high, buy at support, sell at resistance, right? If you're going long, or vice versa, if you're going short, sell at resistance, buy at support. But again, I use those visuals. Support resistance, you can think of valley levels and peaks and valleys, or you can think of floors and ceilings, just to kind of get those analogies into play. So you can think of the top of that cup as a ceiling level, peak level, resistance level. So when you're typically trading, again, this is the typical way to trade this pattern. However, there's other ways to trade it, right? The typical way to trade the cup and handle pattern is when price breaks above the top of the cup. So when price breaks the top of this cup pattern right here, you would go long, and then your stop loss would be this red arrow here, a close below the handle. So go long on the break of the top of the cup, candlestick close below it as your stop. So this is a perfect looking cup and handle, right? But in the real world of trading, not everything is perfect. There'll be many times you'll see something that looks like a cup, and then the handle doesn't pull back, or it trades sideways, or there's no handle at all and it breaks out, or it fails, right? So this is a perfect looking one if you want like a really great looking one. Break at the top of the cup, candlestick close below here as your stop. So that's option number one on how to trade it. All right, option number two would be let the stock break out and then watch for the retest of the top of the cup. And if that hold, because remember the top of that cup is resistance, many times the stock will break out, come back and retest, so previous resistance becomes support. If it holds support, then you watch and see if it continues up. But many times you'll get fake outs and price will go and then it'll fail. I'll show you that. So option number two would be wait for a candlestick retest. Now you'll see right here, there wasn't a retest. So many times you won't get the retest. If you wait for the retest, many times you won't get it. The other option is to trade the breakout of the handle. You can see right here is a beautiful looking bull flag. Price went up, consolidated back down. You could get in at the break of this bull flag, and you could use a candlestick close below that flag right here as your stop. So that's option number three. Is there a right way or wrong way to trade it? No, it's really up to you on how you want to trade it. It's everybody kind of sees things, differently, right? That's three different ways to kind of trade it. That's just looking at the obvious pattern. But remember, looking left, right? So there's other resistance levels back over here. So what happened over in the past affects the future too. So that also determines how you trade things. When you have these lines on your chart, see how I extend them out to the right? So what happens in the past affects the future. So I can just kind of click right over here, see these peaks, connect those peaks and valleys, because then what happens over here also coincides with this pattern, and then you can see what happens out over here. Remember those trend lines, connecting those peaks and valleys, as many peaks and valleys as possible. So you can kind of see as it kind of starts to break out here, you can kind of draw your trend line out this way, and then it kind of changes as price action goes along the way. But, as it goes short over in here, see that? Just kind of looking down over in here, connecting those bases, right? So, also, cup and handles, many a times, are found inside inverse head and shoulders. So you'll see a head area, left shoulder, right shoulder. So cup and handles, many a times, are found and they form other patterns like those inverse head and shoulders, which is the opposite of a head and shoulders. Head and shoulders is bearish, inverse head and shoulders is bullish, and you'll see right here. And it's kind of just forms that support level, and then you can call that almost a cup, a bigger kind of cup pattern right here. So you can kind of see right over in here. So this cup and handle pattern could also turn into a bigger overall cup, right? So as it goes up, it forms another top of a cup. So just extend this down over in here. That's a cup, right? So you'll see as you just kind of go along there's so many different cup and handle patterns. So now remember what happens over here affects over out to the future, right? So you can see SPY now, big overall cup, right? It's not going to be always a perfect looking cup at the bottom. Just round it, right? So if you come down and it's a U. Look at that beautiful looking handle forming, right? And what's happening with this handle and this consolidation, remember what happened in the past and also back over here affects the future. So, right, so price just kind of goes up and down. This is why it's incredibly important to learn price action. This stuff is not a guess, right? What's happening every single day in the market is not just people randomly guessing everywhere in the world on where to buy and sell. I'm talking the good traders. Many of the new traders, that's what they do, right? But whether you're doing well or not well, right, good trader, bad trader, it still forms price action, right? And each of those candlesticks, this is where it forms these patterns. So right here, this cup pattern right over in here, at this point, you'll see this kind of handle right over in here. If price breaks above, now again, it's not going to be perfect, but if price breaks above this top of this candle right here, you can go long. Now that's kind of a top of a cup over here. Now here's where you'll see, this is where I'm going to remove these drawings where there was kind of a fake out. So when I draw these drawings over in here, you'll see kind of rounded down. You'll see cups inside right over in here. So here was a cup, right? So, you know, here was a cup, and then here was a handle, and then you see how it didn't break the top of this cup. So right over in here, here was a cup. That's where I'm saying not everything that looks like a pattern is just going to work, right? Or break out. Here was a cup and a handle. Price broke out of the handle here, but look, it failed at the top of the cup, fell back down. Now, kind of over in here, as I continue these drawings here, this is where the kind of a fake out happened, right? And this is where, again, sometimes you might trade the breakout. This is where I was saying retest. Sometimes you'll trade the breakout, and then there's a fake out, right? Breakouts, fake outs, remember that. Cup, right? So you got the cup. Top of this cup right over here extends to the future. So I remember when I had said trade, I'm not saying to do it, I'm saying the rule, or not the rule, or the guide, right? Standard would be trade, get in at the break at the top of the cup using a close below the handle as your stop. Now you can say, where was the handle over here? Well, that's kind of subjective. You could say down here, but also your stop is going to be relative whether you're trading shares or options, right? Because if you wait for, you could blow up, and it all depends what kind of option strategy you're doing. If you're doing a naked, or like a buying a straight call, or, you know, on the way up, if you wait for it to fall, you're going to give back everything, right? If it's shares of a stock, you can stay in potentially longer. So that's where I'm saying your entries and exits are kind of subjective. It's based upon your risk management style, but the kind of like the guide would be top of the break of the cup. Now, see what happens? Remember I said wait, you can go and go long, or the other thing, going back to cup and handles, as I was saying, you could also use another thing to do. I'll go back and then I'll come forward for a second here. You could wait for a close below, where was that? And I'll just kind of say it right here. A candlestick close below here as your stop. Or another thing you could do is just wait for a candlestick close below the top of the cup if you want to keep your risk management smaller, right? Or keep it tight risk management. So you can use a candle close below here, or a candlestick close below the top of the cup, because that would mean it failed support if it fell, and then you can keep tighter risk management. I say that because going over here, right, price went up. If you went long here, you'll see if you took the long without waiting for the retest, what did it do? It failed, right? So you could have waited for a candlestick close below here or wherever you wanted as a stop, but you'll see there's many times there's fake outs. But remember, just because something looks like something, look left. What is it? A part of a pattern. So just because you see a cup and handle doesn't mean it's a great cup and handle to trade. So here is an example of a kind of a breakout, and then it faked out and fell back down. Now the pattern's not over and done with, because now it's forming a bigger overall handle, right? So you can see how something can be a cup and handle, and then it can the cup can keep extending up, because if this keeps going up, you know, up here, it can turn into a bigger cup, right? So, you know, I can take these lines. Remember, look left. What happened over here? Those peaks and valleys. You know, kind of connect them right here. See that? Connect these. See how they're extending out to the future. you don't have to go crazy with all your lines, but just kind of give yourself a guide. So now you can see what's happening over here. So you see what happened in the past affects the future. You have this bigger overall cup. And this is where, if you traded the breakout, there was a failure down. If you waited for the retest never happened, right? But now you can see possible bull flag. We've got to wait and see. Possible cup and handle, bull flag. What are you also looking for? Well, now you're going to watch and see in this channel, this falling channel, that handle, if the handle holds and it goes and breaks out, or you watch these areas and then see if support holds, right? So you'll connect these areas down over in here, kind of down over in here. And so we'll have to watch and see. So you can say, what is it going to do, Lucian? I don't know, right? Price action. You got to watch these patterns. Price action, I'm not going to give a statistic, but maybe 3/4, more often than not, the patterns, if it's a solid one, is going to work in your favor if you trade the pattern. But there's still those percentages of time where they fail. That's why risk management is the key to the whole thing, right? So you don't just let something drop. You know what I mean? You can keep a tight stop loss. If, you don't have to say, let me wait for a whole candlestick close below the handle if it's up here. You could have said, hey, I got in on this breakout. I got faked out over here. I'll get out over here and I won't let it drop all over here. That's up to you, right? And what your trading style is, and also what your trading time frame is, and what are you trading? Are you trading shares of a stock? Are you trading a straight call or a straight put? In this case, if you're bullish, you were buying straight calls. If you're doing credit spreads or debit spreads, right? If you're doing penny stocks, large cap stocks, and then what is your chart time frame? So this is where when you're trading, there's no exact rule, because it's what is your risk, what is your risk management, what is your trading style, what are you trading behind it to put it together. But the point being is you still got to know the patterns, right? Once you know the patterns, you put your risk management behind it with your trading style. So this is why, I stress it a lot that this stuff isn't guesswork, right? Once you look at price action that's happening real time, it gives you a better understanding of how to trade. But you have to understand the price action, understand it, and not listen to all the different talking heads and all the people on social media and out on the TV that never tell you where to buy or sell. They just say, oh, the market's doing this, or it's doing that, or this president's doing something good, or this president's doing something bad, and OMG, and like whatever. Well, look at the charts, see what's happening. And stocks run with the overall market, typically, right? So these bigger stocks, penny stocks as well, if the market's going really well, you'll see the stocks going up with it. If it's going really bad, you'll see it going down with it. So that's why it's no surprise when stocks go up or down or do something, because we'll basically look at the overall market and see what's happening, right? You understand these patterns, look at what's happening in the market overall, and you can see what's happening with these other stocks. So I'll clear my drawing set here right now, just randomly just looking here. I'll actually go over to BABA. That was one I was looking at that I wanted to show you, which is interesting because you'll see lots of cups on here that don't actually go and do anything, right? So you'll see right here, kind of draw those trend lines. And this is kind of where you can kind of gauge a bigger picture. Remember, connect as many peaks and valleys as possible. So, you can kind of go down over in here or out. Remember, what happened over here, everything changes as price action moves out to the future. So it could have been, if you look over to the left, it was down here, and then it kind of extends out over here, and now it's extending out over here, right? So your lines and things change, but kind of get a bigger overall kind of perspective of what's happening. You kind of see this overall falling channel. So price is just falling, right? But when you see back over in here, when I grab my tool, you'll see a lot of times these big cups, right? So you'll see kind of right in, and also it changes, right? So you'll see big cup and then kind of a handle down here. Well, nothing ever happens. So just because cup and handles are a bullish pattern doesn't mean it breaks out. What's happening overall? What's the trend overall? You'll see back over in here, cup, oops, didn't want to do that. cup. See that rounded bottom? Kind of a handle. What did it do? Not much of anything. This one has a cup, right? No handle. So this was a cup right over in here. Didn't have a handle. It just went and broke out over this level here. And then what did it do? It failed. Remember, now cup and handles, part of inverse head and shoulders, but also parts of double bottoms. A bottom and a bottom. So it's another cup. It's like two cups, but they're not always perfect. This is a perfect looking double bottom, but it's not always going to be that way. Sometimes it's just a short looking double bottom, like right here and right here. Two bases, right? It's a bottom. But that bottom, two bottoms over here, what did that do? If I put it over here, it turned into kind of a cup. And then look, the handle failed. Now, if you see over in here, let me remove this. Right here, right here. Now you have kind of a cup pattern forming here. Beautiful looking cup and handle here, right? So kind of a cup pattern. Handle right up here. Price, what did it do? It broke out, right? But you could also look right here. Head, right shoulder, left shoulder. So left shoulder, head. This is kind of like a right shoulder. Inverse head and shoulders. So you see that? Like the cup and handle inside of an inverse head and shoulders. Left shoulder, head, right shoulder. Top of the cup or top of the neckline of the inverse head and shoulders. You can see, how am I seeing that stuff? Go right over to the left. Connect the peaks, right? Peaks and valleys. See how they affect the future. What happens back here affects over here. See what happened here? See when I click this line over here, what does it do? It extends out over here. And this is why when you learn these candlesticks, single, double, triple patterns, you'll see these things when it comes together. It's no coincidence why price moves up, moves down, because right here, what happens in the past affects the future. You look at those candlestick patterns, you look at the bigger patterns, and then you look at the bigger overall trends. So you see these patterns inside the bigger overall trends. So you can see, you know, when they say buy low, sell high, well, what does that mean, right? Because there's buying low at like a specific pattern. There's buying at the base of a trend line. There's buying at a break of a specific pattern. But when you go to sell, this is why it's important to know, what is your entry? What is your exit strategy? Determine that before you take any trade, because you don't just buy and say, hey, I'm holding and going to the moon. Because what if you're one of the new traders and most traders that are buying at resistance, those ceiling levels? And then what did price do? Hey, you're going to buy BABA back here, and I'm just going to hold it. It's going to the moon because some talking head on social media or on TV said, BABA's incredible. You bought it at $180. And then what does it do? It just goes timber. It may go back up again. I don't know. Hopefully it will just hopefully it will, right? But the reality is, if you bought BABA low and knew when you were going to sell and take profit, right? You can buy and sell, make money, look for reentries. Buy low, sell high, wait for price to go back low again, buy low, sell high, right? It's as simple as that, but it's understanding and learning these patterns and what they're doing overall. And just because you see something doesn't mean you trade it. Right? So that's kind of an example. You see these cups, they're everywhere. You'll just kind of zone in, and as I kind of just draw these right here, you could just kind of just see, right? Rounded base, rounded base. That could be a bigger cup and handle overall. See how it just kind of extends to other patterns. You can see a cup, it can turn into a double bottom. It can be a bigger cup overall. And then just see, remember what's happening left. And that's why you can say, how come that cup and handle didn't break out? Well, if you look left and you see over in these areas here, right, and you connect these levels and right out over here, why didn't these cup and handles break out and go to the moon? Because they hit resistance, and these reversal candlesticks didn't break that ceiling. So what did it do? It started to fall. And you can say, well, what are the levels of support? Look left, right? Connect support right down here, which affects the future. So you see how price, these patterns, when you see what's happening in these other patterns, then it forms those sideways channels, those horizontal channels, goes up and down. So price goes up, hits resistance, comes back down and retests support. What did it do here? It failed support. Then what did it do? It went back and retested resistance. It failed resistance. What did price do? It hit this angular support level, right? So this is a low level right here, buying low. But a lot of traders, what they do, new traders, they just buy at the peak levels and then they just lose money. So this is where it comes in where people say, the market's out to get me. No, it's not. That's not true. The stock market is just a battle between the bulls and the bears, and it forms price action, which forms patterns. And if you lose money or if you lost money consistently in the market and trading, it's probably just because you didn't know the patterns. If you know the patterns, you can put the risk management on your side, and trading's all about learning these patterns, managing your risk. The concept is very simple. Learning the technicals is very simple. It just takes time, like anything. Treat trading like you would an education, a career, a profession. Put in the time that it learns. People don't get a college education in 5 days or 5 weeks, right? It takes 4 years? Many times longer, depending what type of education you're looking for. But candlesticks patterns, relative, depending on how much you're looking at it, might take you 6 months, a year. Relative to having a skill for the rest of your life with trading, not too bad, right? But it all comes back down to putting the time and the effort that it takes to learn candlesticks, price action, which again, I can't stress enough, is the foundation to everything in the stock market, into trading, to your 401k, to what's happening in this world. What's happening in this world, whatever, good or bad, learn price action, look at the charts, and then you won't have to ever guess what the market is doing because it gives you the clues. They're right in front of you, right there, once you learn these patterns. So again, we have a lot of resources to help you depending whether you're watching this in our courses or out, as a single video. We have a candlesticks ebook that tells you all these different patterns and shows you entries, exits, stop loss levels. We have our wallpaper backgrounds. I highly suggest downloading those, putting them on your desktop computer or your laptop or your phone. You let these patterns get into your subconscious. They take time to learn. So just kind of see them. Once you start to see them, you'll see them everywhere. You'll see them in nature, at your house, out, valleys, peaks and valleys and mountains. That's why I say peaks and valleys. You'll see mountains and trees and all that kind of stuff. You'll see head and shoulders out in trees. All this stuff will start to pop out at you once you take the time to learn. So we got those resources for you. We have our courses for you. And then each day we teach this stuff live in our trade rooms and our Discord. We have a large caps, penny stocks, and futures room where we teach the market. We teach this stuff, price action, live every single day.